Hi all and welcome to this week's Symax Fintech Market Insight. As usual, it's broken down into 4 parts. So here's part 1. As usual, we start with our disclaimer. So trading involves the potential risk of loss of capital. It's not suitable for everyone, although hopefully it is for you. When it comes to leverage, just be careful because you can lose substantially more than that initial investment. Everything we include in here is just purely for educational purposes. We're not trying to provide you with advice. We're just trying to help you prepare, understand the markets better, to help you make better decisions. But of course, if you are looking to invest or trade, that has to be your decision. And before you make that, you should consider your financial situation, your level of experience, and your risk appetite. And of course, on your risk capital, you're prepared, but more importantly, can afford to lose. If you've got any doubts whatsoever, seek independent financial advice before risking your capital. Okay, so first of all, we're going to look back at what happened last week. So there was confirmations from lots of central bankers and of course the FOMC minutes that basically there's a pause at the moment. It doesn't mean that there aren't going to be any more rate hikes. It just means at the moment the data's not strong enough, especially based around inflation, to merit any more rises. And of course, those rate hikes are still feeding into the economy from the ones that they've done up until the last couple of months. Now, OPEC Plus postponed their meeting, so to me that just makes me sense that there's a lack of sort of agreement between member states on what to do. When oil prices still aren't moving higher, a bit of pressure on them. Oil's around about $75–76 for WTI, so it's way below where the Saudis want to see the price, and probably the Russians too. Speaking of Russia, so they bombarded Kiev with a massive drone attack, the biggest one ever seen. In the US there was Thanksgiving, so that sort of killed off a lot of the volume Thursday, Friday. And the Israel-Hamas ceasefire began, and that's only planned to last a few days. There has been some hostages released, so whether that will get extended or whether it will get broken, only time will tell. So if we look at the data itself, so in the US we had home sales came in, they were lower than expected. They came in at 3.79 million month on month, that is, so yeah, I mean, with interest rates where they are, is that really a surprise? Then the FOMC minutes came out. All the members of that committee seem pretty unified in pausing any more rate hikes for the moment, but still leaving the door open should inflation start to move up again. And then of course we had durable goods. So durable goods came in at negative 5.4%. Now, sort of when you see durable goods come in that low, so they are the bigger ticket items. It was only expected to come in, well, they were expected to come in at 3.1%. So, there was a big disappointment there. And it just goes to show that people are being a little bit more selective with their purchases now. And obviously all these price hikes, rather than rate hikes, the price hikes are impacting consumers' choices. Then the initial jobless claims came out. That came in lower than expected. It came in at 209,000 instead of 225. Michigan consumer sentiment came in higher than expected at 61.3. And then we had the PMIs come in, the composite 50.7, so again in expansion territory. Manufacturing was a little bit lower than expected at 49.4, just below that 50 level. And services came in at 50.8, which was higher than expected. And there's a lot more PMIs on here, so it gives you a chance to sort of do some comparison between the different countries or zones to how they are performing. as I always say, I think the US still have the strongest economy. But of course, a lot of that is from the amount of stimulus that they added from COVID, which just seems a lifetime away now, doesn't it? Okay, so in the EU, consumer confidence came in at negative 16.9, and then their PMIs came in at the composite at 47.1, manufacturing at 43.8, services at 48.2, which was higher than expected, but again, they're all below 50. And then in Germany, PPI came in negative 0.1% month on month, which is negative 11% year on year. GDP, obviously disappointing at the moment, came in at negative 0.1% quarter on quarter and negative 0.4% year on year. Then if we look at moving on to the PMIs there, IFO first. So the IFO business climate came in at 87.3. The current came in at 89.4. Expectations were lower than expected at 85.2. Okay, so now back to those PMIs that I was about to talk about. So yeah, I mean, again, a little bit disappointing there. So composite 47.1, manufacturing at 42.3, and services 48.7. So, you know, the services was a little bit higher than expected, but they are just still that little bit disappointed, and obviously below 50. You know, it's considered contraction. I think they've got to be below 45 personally before they have massive concern, which of course they are in some places. But yeah, so it gives you a chance to compare how the nations are doing when you're looking purely at PMI. Okay, so moving on to the UK. Public sector borrowing came in lower than expected at 13.97 billion. It was actually expected to come in at 21 billion, so a good, nice surprise on the downside there. And then when we look at PMIs there, the composite came in at 50.1, manufacturing 46.7, and services came in at 50.5. Sorry, I just need to make a change there. So, and then consumer confidence was negative 24. So again, a little bit mixed. The UK budget was sort of met a little bit positive, but not a great deal. You know, the dollar didn't have a great week anyway, especially with it being closed on Thursday and Friday. You know, everyone takes, or the majority take, a long weekend for Thanksgiving. And that did allow the dollar bears to sort of take a little bit of control and take advantage of that. Then Canada CPI, the core rose 0.3% month on month, which is 2.7% year on year. And then new homes came in at 3.1% year on year. Retail sales came in higher than expected at 0.6%. It was expected to come in at 0 month on month. Then in Australia, you know, the Royal Bank of Australia minutes, again, sort of highlighting that the potential's there for more rate hikes if required. Their PMIs came in, the composite 46.4, manufacturing 47.7, and services 46.3. So all sort of fairly stable, but again still below 50. In New Zealand, credit card spending came in negative 2.9% year on year. Retail sales came in at 0. They was expected to come in at 0.8% quarter on quarter, so a little bit disappointing there. Japan CPI came in 3.3% year on year. You know, they've still got negative rates just, but you know, more pressure on them to perhaps move rates into positive territory, or at least go to 0. PMI manufacturing was 48.1 with services 51.7. And in China, they left rates unchanged at 3.5%. So just moving on to highlight what we do as a company. Obviously, the majority of you are probably familiar with that, but there's always some new people viewing these. So it's just to give you a little bit of an insight into Symax Fintech as a company. So apart from the YouTube, we provide daily newsletters, which include sort of global headlines, global news, and then as an option, there's fresh chart levels and pivot points each day. Then when it comes to sort of workshops, you know, if people are looking to get into trading, then our sort of introduction to trading is a great one. Trading for beginners. And then for others that are already trading but have got gaps in their knowledge or their trading skills, then we can help you with those as well. We do offer 1 week courses. They can make you feel competent and confident in just 1 week. Does it make you a trader? No, but does it give you the foundations on which to build your trading career? For sure. And you know, if you've got that inner trader, I will find it. And of course, now you have the option of going for one of our new course, which actually includes a free trading challenge attempt as well. And then if you're really serious about making trading your career, then our comprehensive accredited masterclass is the one for you. It's designed to provide you with all the knowledge and trading tools required to navigate any market conditions, and also any asset class. And the next one of those starts on the 19th of June. So you've got a week to register if you're interested. Then trader mentoring, you know, some people don't want to go through courses, but they do need help still, and I can certainly do that. Consulting, we consult to companies around hedging, FX and commodity exposure. And then of course we provide you know, a mass of educational content that can be to individuals, exchanges, to brokers. And as I just mentioned, if you're looking for that funded account, you know, maybe you're a bit sort of undercapitalized, or possibly you just don't want to use your capital, then there's the opportunity to go through the challenge and hopefully qualify for a funded account through one of our partners, Nordic Funder. If you'd like to contact us, it's info@symaxfintech.com. Any questions you'd like to aim directly at me, it's chris.tubby@Symax Fintech. Sorry, go back to that one, Chris Tubby at symax-int.com. Just get so used to the fintech part. And of course, look forward to seeing you in the second part.